If you're over 60 and you still use a debit card at the ATM the way you did 20 years ago, there's a good chance you're one small mistake away from having your account frozen. Not hacked, not stolen from, frozen by your own bank. And the letter explaining why usually shows up 3 to 5 days after the money is already stuck. This isn't rare. It happens every single day to retirees who did nothing wrong except misunderstand how modern ATM and debit systems actually work. And the scary part is this: your bank is not required to warn you before it happens. The system is built to protect the bank first. Protecting you is your job. Here's why this matters in real numbers. If your Social Security deposit lands on the 3rd of the month and your account gets frozen on the 5th because of one of these mistakes, you're not just missing a few days of access. You could be looking at your rent payment bouncing, your automatic Medicare premium withdrawal failing, and a returned payment fee stacking on top of that. One frozen account can trigger 2 or 3 fees in the same week, and each one is small on its own, but add them up over a year and you're looking at real money. Money that came out of a fixed income you don't get to replace. Most people think a frozen account only happens after fraud. What that misses is that banks freeze accounts far more often for pattern-based suspicion than for confirmed theft. The real issue is that the bank's fraud software doesn't know your habits. It only knows patterns. And when your ATM behavior breaks pattern, even for an innocent reason, the system reacts first and asks questions later. A second myth is just as common. People assume that as long as there's money in the account, the ATM will simply work. What that misses is that ATMs and debit cards operate under daily limits and network rules that have nothing to do with your balance. You can have $10,000 in your checking account and still get denied at the machine, locked out of your card, or flagged for review, because the issue was never about how much money you have. It was about how you tried to access it. And a third false belief, one of the most common ones I hear from viewers in this age group. People think that calling the bank after a problem happens is fast and simple. What that misses is that once an account is placed under a security hold, many banks require a verification process that can take 1 to 3 business days, sometimes longer if it falls over a weekend. The money isn't gone, but it might as well be gone if you can't get to it when the mortgage or the pharmacy needs it. So let's talk about the 3 specific ATM mistakes that most often trigger this exact chain of events, and why each one matters more for someone in retirement than it did earlier in life. The first mistake is using out-of-network or unfamiliar ATMs for large or repeated withdrawals. Every bank sets a daily withdrawal limit, typically somewhere between $300 and $1,000, depending on your account type. That part, most people already sort of know. What almost nobody notices is that using a machine outside your bank's network, especially one attached to a convenience store, a gas station, or a standalone kiosk, raises a flag in the fraud detection system differently than using your own bank's machine. It's not illegal, it's not wrong, but it's exactly the kind of behavior automated fraud monitoring is trained to notice, especially for older account holders, because that age group is also the most targeted by scammers who pressure victims into withdrawing cash from unfamiliar machines. The software doesn't know the difference between you running an errand and you being manipulated by a stranger on the phone. It just sees the pattern, and it reacts. Wrong PIN entries across multiple machines cause the second mistake, and it's a quiet one. Most debit cards lock after 3 to 5 incorrect attempts. That much is common knowledge. Here's what people miss. Many who are unsure of their PIN try it once, get it wrong, walk to a different machine, and try again, thinking that's a fresh attempt. It usually isn't. Most systems track failed attempts at the card level, not the machine level. So 3 wrong guesses across 3 different ATMs in one afternoon can trigger a full card lock without you ever realizing you were close to the limit. And once that happens, you're not just locked out of the ATM. In many cases, your debit card is disabled for point-of-sale purchases too. The same card you use at the pharmacy or the grocery store simply stops working, sometimes without warning, until you call in and verify your identity. Withdrawing large amounts of cash in a short window without any notice to the bank is the third mistake, and it's the one that surprises people the most. This connects to something real and federal. Banks are required under the Bank Secrecy Act to monitor and in certain cases report large cash transactions. Cash transactions of $10,000 or more in a single day generally trigger a currency transaction report. But here's the detail almost nobody notices. Banks don't wait for you to hit exactly $10,000. Structuring, breaking up withdrawals specifically to avoid reporting thresholds, is itself something banks are trained to watch for. So moderate repeated withdrawals in the $2, $3, or $4,000 range over several days can also draw internal review, especially if it's a new pattern for that account. You haven't done anything wrong, but the system doesn't know your intentions. It only knows your behavior compared to your history. Let's put this into a real scenario. Consider a retired couple, call them the Millers, both in their early 70s, living on a combined Social Security and small pension income. Their daughter helps them plan a home repair, and they decide to pay the contractor partly in cash. Over the course of 1 week, they withdraw $4,000 from 3 different ATMs, 2 of which are not their home bank. On day 4, their debit card is declined at the pharmacy. They call the bank, and after a hold verification process that takes 2 business days, they learn the account was flagged for unusual cash activity and temporarily restricted pending review. Nothing was stolen, no fraud occurred, but their electric bill's automatic payment failed during that window, triggering a $29 late fee, and they spent close to 3 hours over 2 phone calls, proving the withdrawals were their own. None of that had to happen. And here is the fix, and it's genuinely simple. Before any planned large or unusual cash need, call your bank directly, using the number printed on the back of your card, not a number from an email or text, and tell them in plain language what you're planning. Say something like this: I'm planning to withdraw approximately this amount over the next few days for a personal expense, and I want to make sure my account isn't flagged. That single phone call takes less than 10 minutes, and it creates an internal note on your account that dramatically reduces the chance of an automatic freeze. Banks want this call. It saves them a fraud investigation, and it saves you a frozen account. Second, always use your own bank's ATM network when withdrawing anything beyond a small routine amount. If you're not sure which machines count as in-network, ask a teller directly, or check your bank's mobile app, which usually has an ATM locator built in. Third, if you're ever unsure of your PIN, stop after 1 wrong attempt. Do not try again at a different machine. Instead, go inside the branch or call the number on your card and have the PIN reset properly. 1 wrong guess is a mistake. 3 wrong guesses across 3 machines is a lockout you caused yourself. And fourth, if you know a larger cash need is coming, whether it's for a home repair, a family gift, or a moving expense, spread your withdrawals with the bank's knowledge, not without it. The difference between structuring, which is a real legal problem, and simply managing your own money in stages is whether the bank knows what you're doing. Transparency with your own bank is what protects you. Here's your action checklist, plain and simple. 1. Call your bank before any withdrawal pattern that's larger or different than your normal habits. 2. Use your own bank's ATM whenever the amount is more than routine grocery or gas money. 3. Never guess a PIN more than once. Reset it properly instead. 4. Ask your bank directly what your daily and weekly withdrawal limits actually are, because most people have never been told this number, and it's different account to account. 5. If your card is ever declined unexpectedly, call immediately using the number on the card, not a callback number from a text message, because that's also a common scam entry point. What makes this dangerous isn't that you're doing something wrong. It's that the system was never designed to explain itself to you clearly. The money leaves first, or gets frozen first, and the explanation comes after, if it comes at all. The real misunderstanding is thinking your balance protects you. It doesn't. Your pattern of behavior is what the bank is actually watching. And the fix isn't complicated. It's 1 phone call, 1 habit change, and knowing your own limits before the machine tells you the hard way. If this helped you understand something about your own bank that nobody ever explained clearly, share it with 1 person, a parent, a spouse, a neighbor, anyone on a fixed income who uses an ATM regularly. This channel exists for exactly this reason, to help you keep the money you've already earned, without losing it to a rule nobody bothered to explain. Subscribe if you want more of these breakdowns before they cost you something. Stay careful out there, and I'll see you in the next one.